all right? It's time. We need to start worrying about the froth. I've been willing to look the other way on this issue because I figured speculative stocks would keep roaring because the public wants them badly enough to pay almost any price. But after a day where the Dow dipped 172 points, the S&P declined 0.28%, NASDAQ shed 0.33%, I think it's time to figure out how many of these red-hot stocks have overshot what they might be worth, not just today, but at any point in the future. Why the change of heart? Two reasons. The first, it comes from a person I revere greatly, Fed Chairman Jay Powell. Yesterday, in a speech in Providence, Rhode Island, Powell was asked about how the Fed feels about higher stock prices. He talked about how they look at overall financial conditions, and he went on to say that, quote, by many measures, for example, equity prices are fairly highly valued, end quote. Now, I have no doubt that there's a whole cohort of stocks that are let's say far more than fairly highly valued. That's the cohort of speculative stocks. Now, I know that many of the stocks connected to the growth of the data center, that's what everyone talks about these days, NVIDIA, Meta, Alphabet, are regarded as expensive by many of you. But when it comes to actual earnings per share, what we care about in Cramer, believe it or not, they're honestly not all that out of whack. Yeah, that's right. Speaking of the entire market, the S&P 500 is trading at roughly 25 times this year, 22 times next year's earnings. That's on the higher side, but it's not that expensive. And a lot of these stocks that I just mentioned, they're within that cohort. I can live with the S&P trading at 25 times this year's earnings, knowing that the earnings are going up and the market will look cheaper next year. And that's particularly the case with stocks like NVIDIA.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.